We've given our opinion. I think yours probably matters a little bit more. Talk us through these numbers.
So what we have seen is a decline in consumer sentiment over the last month, which shows that the tentative improvement that we saw from the historic low in June is indeed tentative. I think we're in for a bumpy road ahead. As you saw, inflation expectations have ticked up a little bit in spite of the favorable CPI reading we got yesterday. I think consumers aren't really going to fold in that kind of information into their expectations until this easing of inflation becomes more sustained.
What is behind the decline in sentiment? Current conditions, expectations, the whole thing. What are the biggest problems?
The biggest issues that are on consumers' minds are, of course, continued inflation, but that's not new. What's a little bit new in recent weeks is that consumers are increasingly concerned about interest rates. They are telling us in terms of the current conditions, in terms of buying conditions for durables, they're really concerned about high interest rates, making it a bad time to buy durables. And we're seeing that with respect to houses and cars as well. High-income consumers who have shown some pretty large decreases in sentiment over the last few readings are also being really influenced by turbulence in financial markets.
Interesting.
Fold employment into this, because employment is holding up. Why is the confidence number coming down when employment is holding up?
So labor markets are, of course, very, very strong right now. But at the same time, consumers are actually expecting some weakening of labor markets in the year ahead. We have the largest share of consumers expecting unemployment to increase over the next 12 months. And so we're seeing some early signs of weakness in the labor market, or at least consumers' views of labor markets.
Joanne, we also came off a week of midterms. And so I'm interested as to how the midterms affected this, and then how coming into a much more gridlock Congress than we may have been expecting, that may change or shift.
So the vast majority of the interviews we completed for November were completed prior to the election. So we're not really going to see an impact of election results until the end of the month. But that being said, there's been a tremendous amount of concern and anxiety and feelings around the around the election. A lot of consumers are spontaneously mentioning political factors at the end of our survey. So certainly that's weighing on consumers, but it's too early to tell how they feel about the results.
What normally happens at this point? Once the data starts rolling over like this, what happens next? What does history tell us, Joanne?
That's a great question. I mean, we're kind of in an unprecedented situation right now where we have this tremendous political polarization as well as this high inflation and, you know, kind of coming off of the pandemic. We have a lot of things that are weighing on consumers and weighing on kind of their attitudes overall. I think, you know, it's possible we could be at an inflection point, but it's we really have to see if these trends are going to be sustained. You know, I think, you know, I said a few weeks ago, and I think it's still the case, we're in for a bumpy ride ahead as consumers fold in all this information and some of the uncertainty hopefully unwinds. And if it continues, I'd expect continued bumpiness.
Joanne, this might be an unfair question, but you mentioned sort of market conditions also and what's happened in the equity market. Does what happened to the crypto market in the last 72 hours, do you expect that to affect this next reading of the survey?
My expectation would be probably not, unless consumers are paying really close attention to it. Where consumers are being influenced by financial markets, it's very much a wealth effect on feelings of their own assets declining and affecting their personal finances. And so I think with respect to crypto markets, there isn't enough, I think, broad-based penetration of that among consumers for it to really drive sentiment, but it could affect some consumers, certainly.
Joanne, the Federal Reserve pays attention to your numbers. How should the Fed respond to these numbers, do you think?
I think that the Fed should what the Fed should take away from our numbers is that consumers don't think we're out of the woods yet. And even though current CPI readings are looking like we've turned a corner, consumers aren't necessarily folding that into their expectations yet. At the same time, consumers are not really showing strong signs of inflationary psychology or entrenched expectations. Very few consumers believe it's a good idea to front load their purchases now of durables or other things in order to avoid avoid price increases or interest rate increases for that matter in the future. So that's certainly a good sign, but we're certainly not out of the woods yet.